let's do this. All right. Hello, everyone, and welcome to the very first PII Uncensored podcast. I'm Adrian, co-founder of Passive Income Investing YouTube channel, and
I'm Erica,
co-founder, and a lovely wife, the brains behind the whole operation. Of course, many of you know this, maybe some of you don't.
It's not true.
It's true. You are the brains. The reason why we decided to do this PII Uncensored podcast is because we have a lot of great conversations typically during breakfast. Well, our breakfast is typically like 10:30 a.m. by the way. But our first meal, let's say, and we have a lot of good, frank conversations about what's happening in the investing world, if there's anything major, videos that have come out, any controversy, any new funds, any new interactions we've had with fund managers, etc., comments, testimonials, whatever it is. And we share good opinions and get some ideas. So we figure, hey, might as well do a podcast because I'm sure people would want this good information, maybe hear our opinions. That's how I see it. And that's why we're doing it at the exact same place, in our home, in our kitchen. What do you think?
Yeah, I'm excited.
Does that summarize it?
Yeah, perfectly.
So I have no idea how often we're going to be doing this. We are throwing around maybe making it a bit shorter, not too long, once a week, every 2 weeks, we're not sure. We recently launched a PII Pioneers podcast, which we invited other income-oriented influencers, finfluencers, whatever you want to call it, because now it's not just us fighting the good fight and trying to educate everyone on an alternative style of investing. So we have a lot more in Canada, in the US, and you guys really loved it. We had good feedback. We're planning on doing that one at least once a month and inviting different people, even from the US, hybrid, income hybrid, and just getting different perspectives. So this is pretty much our perspective. So a little bit deeper into our opinions on things, our experiences, and we're calling it PII Uncensored because we're not editing this at all. We're just gonna talk as if we're having a conversation. So let us know what you guys think about this throughout the whole thing. Put your comments, put your questions. We're gonna be reading them and it'll give us some ideas for topics, for example, in the next episode.
Yeah, I'm gonna start with some rapid fire questions. Then we're gonna talk about the title of this video, behavioral biases and behavioral errors. And then we'll get into some critiques about, the strategy. And then we'll talk about the Blossom event in Toronto and our general Toronto experience and Montreal experience this past couple weeks ago.
Yeah, I mean, today's November 7th, so it's already been, we're a bit late on it, but better late than never. So we still have it pretty fresh in our memory.
Okay, rapid fire questions.
Rapid fire, let's go.
Okay, what age or what year did you achieve financial independence?
2019.
2019?
Yeah.
And
financial independence, we did it 2019, yeah.
How old were you?
30, it was like 34, 35?
Yeah, exactly. And what year did you quit your 9 to 5?
I'm pretty sure it was the end of 2020 because you, I believe, quit at the end of 2019, the last day of 2019.
December 31st, 2019, I brought in my laptop to the office, and
you were so happy to go in that day.
It was such a good New Year's
Eve. It was the best going to the office day ever.
But no one was at the office. Everyone was working from home during the holidays. My boss had to come in just for that. I felt bad, but...
Well, I remember you said, I'm going to do it on the 31st because nobody's going to be there, so nobody's going to bother me of how, what do you mean you quit and all that?
No, they were already doing that. I mean, it was inevitable. Okay, next question about the YouTube channel. What date was the first video published?
February or March of 2020, right before COVID, right?
It was during COVID, March 4th, 2020.
Just when it was starting.
Just started.
Unbelievable.
Yeah.
Unbelievable.
And now we're 5+ years later. How many total views do you think the channel has?
Views? I think... I know we passed 10 million recently, so I would say 10.5, 11 million views.
As of today, November 7th, it's 13.4 million views.
Jeez, so it's accelerating.
What do you think about, thinking that your face has been viewed 13.4 million times on the internet?
It's funny. To me, I get a chuckle out of it. I try not to think about it to make me nervous, but I'm just not programmed that way. I don't get anxious or nervous
Yeah, you're very pragmatic, very stoic, which is one of the things I love most about you. So I'm sure that resonates with the audience.
It's a good trait to have in investing, and it has to do, I think, with, of course, my personality type, but also my career, my IT career. Maybe we could get into that because it's the type of job I had where you had to have those qualities to excel in those positions.
Yes.
So.
And okay, so 5 years later, 13.4 million views later, how many videos do you think you published?
700 something.
Yeah, 727.
I recently checked that, yeah. Well, you see it at the top of the YouTube, so I have it fresh in my memory.
Anything, any fun fact you want to tell everyone about those 727 videos?
I've been waiting to tell this fun fact. Maybe I said it or not, maybe I said it to people privately or not, but out of the 700 videos, I think 99.9% of them I literally filmed in front of my computer, as everyone knows, webcam, whatever, in my underwear. And speaking of, I'm in my underwear right now. So, but I mean, it's just I'm always in my underwear around the house.
Yeah, it's very warm here.
Panama,
I mean,
you have no choice.
Yeah.
But even back home, I wore pants back home because it was just cold.
I don't even remember. I know I was wearing like joggers and
you were wearing
sweatshirts,
covers and yeah.
I had those slippers from Costco with the fur coming out. I actually missed those. They were so comfortable, but you can't wear that here. I mean, it's way too hot here. But
definitely heard you coming from a mile away, yeah.
yeah, the sound, yeah.
Unbelievable.
Okay, so financial independence in 2019, meaning that all our debts were paid, no mortgage.
Our income exceeded our expenses, or at least matched it, but in our case, it exceeded it by, I'm pretty sure it was $500. I remember very clearly our portfolio, I think first full portfolio, which was complete anarchy, all over the place, the most ridiculous portfolio you've ever seen. And you could still see it. It's the first portfolio unveiled on the channel. But, you know, we're still amateurs.
Yeah, and I guess what happened was, you know, in 2019, I had resigned, but you know, it was a plan. We had planned it.
Yeah.
It was as of 2017 where we had finished paying our mortgage and we started investing for dividends for the cash flow style.
I believe it was 2017, mid 2017.
Yeah. And I remember we were traveling. We were having some good, decent times there, being financially independent. We went to Italy a few times and
Miami.
The Miami trip was very interesting to me because that's when I really made a decision. Like, okay, babe, like I need to do something. I can't stay in that office, that cubicle life. I couldn't do it anymore. It was 17 years.
Yeah.
And so
it's a long time.
But we had achieved financial independence 2 years prior, so all our disposable income was going towards a portfolio and dividend stock. So I liked the cash flow system. So it was something that we saw after $1,000 a month. We realized, okay,
it works.
You could just scale this up, and you know,
$1,000 a month was important milestone.
It was a huge milestone because it really proved that that the income comes in every month, and that if you scale it up, it could multiply, 3, 4, 5, whatever, how many times. So, and then, I guess what happened was, I'm going back again, it's so long ago, but I was taking night courses to get my marketing diploma. Yeah. And I wanted to quit my current job so that I could properly, look for a new job in the field. I had a lot of contacts, big network. So I knew IT, services. Before that, I was in, web design. So with the marketing, I figured I want to be more choosy. I want to be able to choose something better.
So we need to replace the paycheck.
Yeah.
Right?
So the only way to do it, by the way, it's completely faded. It's terrible.
I know, that's the dishwasher.
Yeah, I know, it's terrible. So, what were you saying?
Yeah, you have to replace your page. You're talking about your marketing.
So the cash flow system really resonated with me. Prior to that, I was in financial advisor when I had first started working at CGI. I was hired at 20 years old, permanent employee at CGI.
Now you're going way back. Do you remember, just touching back on the financial, that first month, do you remember our monthly expenses and our monthly income? Do you remember that? Take a guess.
It was like 3,300.
A little bit. I think I remember 4,000 were our approximate expenses, but I always overshot it.
Right.
So maybe you're right. Maybe 30, and our portfolio was making about 4,500. Yeah. So already had a $500 but I was still working at that time.
That's right.
I worked for another 6, 7, 8 months. It was at home, so it wasn't so bad.
Yeah.
I was mostly playing World of Warcraft anyway. But
don't do that, kids. Don't do that.
no, don't do that.
Yeah. But
invest your money.
Yeah.
Either way, but yeah, just thinking about how the amount and how like small it looks, but back then it was so big. This was before the massive hyperinflation that happened. So stuff was a lot cheaper. Remember then our rent was everything's just started skyrocketing. So it's like 4,000 doesn't seem a lot, but 5 years ago it was a lot more than it is now. Now 4 grand is like, we put more than that in MSTE every month, which maybe we'll get into, maybe not.
Yeah, well, that's the, it proves the importance of investing because of
and time,
and everything. So, okay, so we'll talk about getting into the cash flow system, right?
Yeah.
This was a result of, and that's the reason why the title of this video is called How My Behavioral Errors Led Us to Financial Independence or Financial Freedom. So, you know, the cash flow system resonated with me. Prior to that, I was in advisors, I was in single stocks, single dividend stocks, and, you know, indexes. I was in all of those things. And behavioral biases, just to give you a summarized definition here, it's where the predictable ways where humans, you know, mess up their rational decision making when it comes to investing because because of emotions, they're looking through shortcuts, get rich quick stuff. So the issue is that every investing style has biases, you know, I mean, so you have to admit, you know, pure indexes is like a lot of familiarity. Maybe there's like some overconfidence in it, but it doesn't actually, you know, in reality, just getting into the index and waiting 30 plus years is not realistic for a lot of people. So
not everyone wants to do that.
Yeah, if in a perfect world, you go to work, you have a 30 plus time horizon. You know, your job is recession proof, it's AI disruption proof. You're going to work, you like your colleagues, you don't have any desires to do anything else. You're okay with doing some useless tasks.
So it doesn't exist then.
Well,
it's like a fantasy what you're describing.
You know, it happens. I'm sure it happened. Actually, I would love to know if anyone is drawing down from their index fund in retirement. If you could leave a comment, because I have yet to meet someone that actually did that. In the consumption phase, for me, it seems quite scary to actually sell shares. That's why, again, I prefer the covered call strategy, and so we'll get into that.
Yeah.
But the behavioral biases, guys, I don't think that it's a bad thing. I think that it gives people like, you know, an opportunity to try and learn from their mistakes. I think that it develops emotional intelligence, adaptability. And it's not, behavioral bias in the finance world is not something that you can eradicate. It's human nature. I
think it's a good thing. Everyone should find, I don't think there's good or bad when it comes to investing. I say it all the time. Just like I don't think there's a good or bad way to get in shape, or everyone could do it. There's a million ways of doing it. Why not explore and figure out your own way? Because that's gonna be the best way. The best thing for you is the best. The best doesn't exist. Maybe it's best, the drawdown could be amazing or the best for someone, but for someone else it's a nightmare. They don't want to do it. So that's how I see it. So
yeah, I mean, it's you know, people learn in the real world scenarios and theory. There's, you know, in the finance world, the advisors talk a lot of theory, but DIY investors are, you know, they're real people. They have circumstances that change, and it's kind of like, I find like you're almost like gaslighting the investor by saying, no, just do this, it's fine, you'll be fine, you know, like, but no, I don't want to stay at my job for 30 plus years. I got in, I was 20, so imagine. And I was doing everything right. I was, you know, going up, getting promoted, increasing my income, saving, investing, and still, you know, on those days where my portfolio was down, it was heartbreaking to think about, oh my God, I'm here another 30 plus years. So it did not fit my general.
Didn't give you comfort.
No, it did not give me comfort. You know, I come from a place where we struggled with money. I was raised by a single mom. You know, she did her best. I'm sure, you know, that's, you know, it's the same story. You hear this very often, but it happens in reality where people do not have the same type of, you know, privileges as others. I mean, to tell someone to just stay in the index and you have to build it up to like, what, 3 million to draw down?
Yeah, the 4% rule. It's like, no, I don't want to do it that way. Is there another way? Yes, there is. Well, there's a million ways.
Yeah, with the internet now, with information being out there, with people like us that are just showing, you know, what we did, and I think that it's important to, that's why we want to keep doing it, because, you know, I know it helped us and I know it helps others because we hear feedback and we meet people, and
especially
and it's also
at the
fun.
Toronto event, which we'll talk about.
Yeah, it's also fun.
Yeah, I mean, just to be clear, this investing strategy that we're in, we think it's the best for us. We don't think it's the best strategy. It's
correct.
If you meet someone who adamantly says, this is the way you need to invest, this is the best strategy, and everything else makes no sense, that's a red flag to me. It's like, why are you, you know, it's like someone telling someone how to live their life. They shouldn't be doing that. Only you know what's the best for you, and for us it's this style.
Some people need guidance. I understand advisors are still a part of the conversation. I think that, you know, as AI comes in and you see more a trend towards DIY investing and retail investors being in the markets rather than going with an advisor, I think that, you know, you have to admit there's some element where the advisors are maybe a little bit,
yeah, maybe they'll make you feel better, but
they're resistant to this change.
Yeah,
they're a little resistant. I find that if you're not open-minded to basically meet a person's needs and you just reiterate the same thing, it's like, for me, I wouldn't be your client. You know, you would lose me as a client, but that's fine. Other people like it.
There's a few problems with the whole industry, and I don't blame the advisors, because we've had an advisor. We really liked him.
Yeah, he was a great guy.
Very nice guy, came to our house and all that. You guys already know the deal, the advisors, and what happens. But remember that they're tied to a certain company. So if that certain company only offers limited solutions, they could only sell you or advise you on those limited solutions, right? It's very rare that I've met a financial advisor who's like completely independent and whatever you want to do, and he has access to everything. So there's a problem with that. There's also a problem with the incentive structure.
Yeah.
That's a big problem, because they're not incentivized on the performance of your portfolio. Maybe some high-end hedge fund advisor type are, where they make money on the profit. That to me is a better incentive. They're just making money on the money they manage. So even if your investments do horrible, for them it makes no difference. So I think the incentive is not that great there either.
Yeah, but there's also advisors that don't work for firms with proprietary products, that they actually just put them in the indexes, and they offer the service of doing the meltdown, the rebalancing, and all that. So again, it's kind of like irrelevant, because you could just go at a discount broker and get into the index.
You could do it yourself.
But you know, it's
no right or wrong.
There's no right or wrong, but we do see, you know, with the stats, like we do see a increase in retail investing. It's gonna, you know, it's reality. Again, I'm from tech, so it's a very disruptive field. When I started, they were on mainframes, and then they ended up on cloud. You know, so it's inevitable. This is something that I feel that. You know, more and more people will have access to more information, and their behavioral biases will only push them to like learn from their mistakes. Because I don't think people learn in a vacuum. I think you learn from trial and error, and I mean, we're humans, right? I mean,
that's the best way to learn, is to throw yourself in and learn, make mistakes.
Yeah.
And
the winners are the people who actually know their own biases and build a system around it, which we did. I knew that my bias was I wanted cash flow. I liked I was drawn to it. You know,
that's because we're a typical poor people mentality, but that's why we were drawn to it, right? Because where we grew up, it was all about the paycheck.
Yes, the paycheck, the dream is to own a property and get like income from the rentals and all that. But I didn't want to do that, because
who wants to deal with that nonsense?
That doesn't sound great to me.
No.
But the cash flow system always felt like it would give me options. Many times, you know, I needed money. My portfolio, you know, it was down.
Or you didn't want to touch it. You didn't want to call Eric and say, can you sell this and whatever. You don't want to deal with that. So it's like, all right, well, I'm just gonna have to keep working and working.
Right.
The options are limited. That's why do-it-yourself investing is so special, because you have access to everything yourself. Now with the technology, the online brokers, bang, connect it to your bank account, transfer next day. It's so much easier than it used to be.
Yeah. So. And I haven't met a DIY investor who went back to an advisor. I think it's always the opposite. And,
me neither.
And we're seeing like there's this thing now where it's called the great transfer from boomers to millennials.
Wealth transfer?
The great wealth transfer. So I feel like the millennials will be more inclined to do DIY and not stick with the old advisors. But who knows? Who knows what could happen? I mean, shout out to those millennials that are not going to inherit anything from their boomer parents like me.
Like you, like us. Well, I have two sisters, so it all gets split. And then there's taxes in Canada. And by the time you know it, you're left with...
The point is not everyone is in that position where they can have the luxury of going with an advisor and waiting 30 plus years for something to grow. It's kind of almost like, I don't know, I just feel like it's a little bit gatekeeping to not be able to talk about other strategies openly without getting like judged or whatever. It's silly.
Close-mindedness.
It's silly. It's
you have
very
to be
silly.
open-minded about other potential solutions or hybrid solutions. You could do. There's hybrids. We know plenty of people that do half income, half growth. This account income, this account growth. There's no right or wrong. We're all investing in the same thing. We're getting our returns in a different way. That's how I see it.
So let's get into the critiques of the strategy. So the main critique is always underperformance. The covered call ETFs will always underperform the underlying.
I would say that's if you bottle it all up and take the critique on a management fee, the critique on it all boils down to the total return. That's 99.9% of it. That's the critique, right? So we could go into it in detail.
Well, we should talk about how the landscape of covered call ETFs is evolving so much that we have covered call ETFs now that are outperforming the indexes. So if you actually look at HDIV versus VSP, and BMO has a great ETF comparison tool for the Canadian ETFs.
Compare 5 ETFs as long as they've been out for a year.
Yes, and you can do a comparison HDIV, VSP. There's XEC. I'll pull it up on the video. Pull it up on the video here. You can see that even without reinvesting the distributions, HDIV since inception 2021 is outperforming VSP. So, I would say that we're not discussing those single stock ETFs that have margin and leverage and like Hui and all that. I'm talking about the real steady, stable, like the grade 8 that are now it's evolving to the grade 16,
grade 18. Yeah,
so I think you should cap at some point. But
yeah, I think we should cap at some point. But just to discuss the underperformance, just to be 100% honest and clear, I personally believe that if there's no leverage, a covered call version will always underperform the underlying. But remember that these funds are not, obviously total return is very important, performance is very important, but that's not what they're designed for, right? They're designed for cash flow while staying invested in things that you like, equity. In my opinion, the real genius behind covered call strategies is that you don't need fixed income crap anymore, which has been just a terrible, horrible investment in the last 10, 20 years. So this is just a really, really cool way to stay in equities, not need the fixed income, which most people needed it for what? For cash flow. So you could stay in equities, get similar returns. You're not going to get the same returns over time if the covered call strategy has no leverage. So that's what I like to refer more to the steam engine, more antiquated covered call strategies. So you have things like QILD, which is the first one in the States, which came out in 2013, I believe. That, of course, is massively underperforming the NASDAQ 100 because the covered call strategy is not that great in my opinion. They're writing too many calls, they're giving up all the upside, and there's no leverage. But those days are gone starting in 2021. I think 2021, the golden age of covered call ETFs came out. And I spoke to Hamilton about it because HDIV is, we're going to talk about HDIV a lot. It's the OG, it's the first of its kind where they added that 25% leverage. And when I talked to Hamilton about it, tell me the mindset, your idea. They've realized that basically a covered call ETF will always underperform the underlying. So how can we narrow the gap? Is there a way to narrow the gap? Because the gap is actually not crazy, like a crazy gap between stocks and fixed income, which is massive, right? Like 0 or 15% return. There is a gap, but it's not insane. That also depends on the strategy, etc. But if we add a little bit of leverage, which in 2021 was almost very, very cheap and nothing, 25% leverage now, and with the back testing, Well, now you're at similar returns. So that is why personally I think that's like the iPhone moment of covered call ETFs is when a little bit of leverage came out to narrow the gap. It doesn't mean you're going to get more, maybe the same. It depends. It depends on the trajectory, the covered call strategy, the cost of leverage of borrowing. But now that we're 3, 4, 5 years in, we could compare HDIV to VSP. We could compare HYLD to VSP. The indexes are the easy because it's a one-to-one. The USCL to VFV, QQCL to QQC, which is the Canadian QQQ. So we have more and more evidence, and what I've discovered through many hours of research, talking to these fund managers, and the proof is in the pudding. With 25% leverage, and let's say you're not doing covered calls more than 50% of the portfolio, so you're not giving up that much upside, you're gonna have similar returns to the underlying, which is like having your cake and eating it too, which for me is the holy grail, because I want the yield, but I want the same total return, similar total return to just holding the S&P, just holding the NASDAQ. I know that was long, but
no,
I have to say it.
No, it's clear. So you agree that the argument that the total return will always be underperforming is...
If there's no leverage,
yeah,
99.9% sure, unless you have some sort of genius fund manager that's using AI, and which I think one has found it in the US. We talk about them, and we actually are partnering up with them for this year because and we'll talk about sponsorships later too. Tap Alpha. So Tap Alpha has T-SPY and the recently launched TDAC, which is an unleveraged, no leverage, 0 DTE covered call ETF on the SPY or S&P 500 and on the Qs, the TDAC one, right? The NASDAQ 100. And they have the closest and best performance. And I think T-SPY is either the exact same total return as the SPY or VOO, or slightly under. I think it's going to get better. And TDAC right now is outperforming the Qs. No leverage, but they are doing a 0 DT strategy. This is why I like the 0 DT strategies. And I've been telling Hamilton and Harvest, look into 0 DT, look into 0 DT. I tell all of them. And Hamilton recently launched their own 0 DT products with a little twist, and they're doing really well. So it's exciting because what if T-SPY or TDAC adds 25% leverage? Well, that automatically means they're going to outperform the S&P and the NASDAQ. And a little hint, it's coming.
So you're telling me that DIY investors will have access to even more ETFs and options that will...
What I'm telling you is it's the golden age of this style of investing. Who knows what twists and little strategies they could do. You see Evolve, let's do 33% leverage. That could work really great as well. Now you have some that are paying twice a month, and maybe weekly is going to come. So you have all these, you have a lot of choices. Gone are the days where you just had the QYLD and the BMO covered call ETFs, which kind of do a rinse and repeat strategy on sectors. Now you have the indexes, you have single stocks, right? In the US, that was very popular. Now Harvest and Purpose are doing it in Canada, even 9 Points getting in the game. They're doing the Canadian one. So now I feel like we're in the golden age of this strategy where you could pretty much have your cake and eat it too, which is you have the income, you have the nice high consistent distributions, and the total return as well, which for me is the holy grail. But the arguments are going to be, well, it's because it has 25% leverage, right? That's the first argument you're going to get with the growth bros. First of all, you're nitpicking. You're choosing HDIV and HYLD. You're choosing the leverage ones. But
but they cherry pick all the time. We've seen recent videos where there's like a campaign of anti-covered call ETFs, and they're cherry picking on time frames, and they're not comparing apples to apples. So it's obvious. I mean, that's part of the game. It's part of the conversation. I have no issue with people creating videos. I mean, I think you have to be part of the conversation. You have to, you're entitled to your opinion. But what happens is that every time there's something like that on YouTube, there's always like these trolls and gremlins that come out of the woodwork, and they start they get super excited about being anti something, and very, very like
they're ugly,
extreme about
well, it is the internet, right? So
very extreme about how to invest and judging people for how they invest and how they live and all that. So that kind of stuff is so strange to me. I mean, on Blossom, there's like these ghost accounts
fake
with no
accounts,
name, whatever. No, they're real people, and they hide behind
real courageous
their profiles, and their whole point is to troll. I mean, if that's you, I mean, if that's someone like you, I mean, get some help. I mean, it's crazy. That's the stuff that, as a person that's, you know, matured in the space, you know, seeing how the evolution of DIY investing has gone onto the internet and to the socials, it's like sometimes it's just like, oh my God, it's like it's just too much. It's just too much.
Yeah, well, we're veterans of the game now, 5 years. Once you pass 5 years, I think you're a veteran. So we're whole used to getting these crazy critiques and trolls and troll videos and whatever.
Yeah, at the beginning, I was really, I took it personally because I never actually had a social media account. I never had a Facebook.
Yeah, that's true.
So I opened all those accounts because of PII, because of the business, and you know, interacting with people. I didn't even realize that, you know, there's a whole meme culture and the way people talk to each other online. It's like they're so brave, right? Because they're hiding behind the keyboards.
Yeah.
It was so funny. And then after a while, I was just like, okay, well, I don't want to spend my time on these socials, you know, these apps. So it's just interesting to me to see that part of what, you know, the explosion of DIY investing and how there's influencers and all that. And of course, you know, you have to be careful of what you're watching. But for us, like for me, I don't assume that people are stupid. Like I obviously when he's making a video and showcasing something, I assume that people would do their own due diligence, because that's how I operate. I don't know if I'm wrong, but
some people don't. But most people do, I would say. And just going back to the troll comments, what you learn is 99% of the comments we always get are positive and great and amazing. Yeah. But that 1 or 2% really has a 98% impact, but only if you let it. With time, it goes away. And another thing why it's so funny and why I laugh every time is that every time there's an anti-covered call ETF video or critique, we always get a bump in views, in digital product sales and subscriptions. Everything goes up all the time. So at one point, there was this guy in the US that was doing personal attacks against us. And every time the video came out, obviously we looked at it and we were annoyed and angry. But after the second one, the third one, we started doing the correlation. That's when every time we got a bump in everything. So at one point I started trolling him. I said, you do another video because we're always getting a high, and then they stopped, you know. So it's fun
I stopped watching.
It's fun to troll the troll sometimes. But like you said, it's all a waste of time.
It is a waste of time. But also, just to advise everyone, there's been like a campaign of fake profiles on Facebook and Instagram, so watch out for that.
Yeah, we're never gonna contact you directly on WhatsApp, Telegram, all that crap. But you guys are smart. They know that. We have a smart audience.
Just to advise people, because for some reason, I don't know, sometimes it feels like we're getting personally attacked, but I don't know if all the other influencers are experiencing this. I'm sure they are.
Maybe when you get to a certain level, the bots start. I look at it as a badge of honor.
Right, but it's still annoying.
Yeah.
It's still annoying. So talking about the performance stuff, okay, we talked about how the leverage obviously helps. You know, it does amplify losses and gains.
Amplifies the risk a little bit. That's just going to be the other argument.
Yes, but in theory, you know, they're talking about amplifying risk. So let's say this ETF that holds a single stock and it has the leverage.
Covered calls.
It goes down, the underlying goes down 2% one day. So this ETF with leverage.
The covered call will go down 2% plus 25%.
So 2.25%.
Minus the call premium.
Right.
So
just to give a practical real world scenario, when you're talking about the leverage of 25%, it'll go down 25% more than what the underlying is. So that's, if it goes down 2%, this one will go down 2.25%. So if you're holding it long term and you're just, you know, it's just accumulating units in your portfolio because you're not spending all of the money, you're spending some, you're reinvesting some.
Yeah.
What exactly do they mean by saying it's riskier?
Well, it's just a technical. When you add leverage, you're just amplifying.
Okay, so
the
you're
risk.
amplifying losses and gains.
Yeah, but here, this is what they don't understand. When you're doing covered calls, you're lowering the risk.
Yeah.
Technically, psychologically, and technically, right? That's why sometimes people call it you're selling volatility.
Yeah.
Right, volatility. So doing covered calls lowers the risk a little bit. That's why if you go on QYLD and you could actually see the beta score versus QQQ. So technically, when you're doing covered calls, you're lowering the risk. Obviously, it depends on the risk level, depends on how much covered calls you're doing, but I just want to speak generally here. And then adding 25% amplifies it.
Right.
So what Hamilton specifically did is to choose the level where yes, we have 25% more risk, but try to nullify or to make the risk, the volatility similar to just holding the underlying. So when people say adding 25% leverage increases the risk, that's not technically correct. Yet that portion is, but they're omitting the covered call portion, which lowers it. So it kind of balances it out. Is it perfect? No, but over time, with the back testing, I could just tell you what Hamilton told me and Harvest has told me from the back testing, you're getting similar return.
Right.
And I could prove it to you. If you go to HYLD and you look at the description, it says HYLD is a higher yielding alternative to the S&P 500 with similar volatility.
Yes.
You know as well as I do, in case you don't know, guys, when they put something on our website, they have an army of lawyers and compliance look at it. They would never put that if it was a lie. So it's similar volatility. So that addresses the risk portion.
Right.
Then there's the psychological thing, which to me is way, like, I consider the cover call, that format, that wrapper, much lower risk than just holding the underlying. Because if you're just holding, for example, the S&P instead of HYLD, you're gonna have to sell the S&P at some point. The HYLD, you never have to sell it. So I think that's a huge risk reduction. That's just my opinion.
Yeah.
Risk is in the eye of the beholder. It's not just technical.
Yeah, I think that's a good point, because the reason why I like the system so much for me is that, again, my behavior will not change, you know, when I started this in my 30s, 40s, 50s, 60s, 70s, whatever. So I will not have to do anything but receive my distributions and decide what to do with it every month. I don't have to at some point start drawing down, looking at, well, how much should I draw? How much do I need this week? How much do, you know, what is this the right amount for me to retire now? Like, I don't have to do any of that. And
the time and effort it takes to do that.
The behavior never changes. And I find, like, if you learn this earlier on, it's just more beneficial, because again, I'm a DIY investor. I'll keep saying it. People call us unlicensed, unprofessional. I wear that as a badge of honor. I'm an unlicensed, successfully unemployed DIY investor. So yeah. I think that the earlier you do your own income portfolio, and it means that you understand and you're starting to manage your money, you know, more personally. So this behavior of receiving your distributions every month, deciding what to do with the income, with more experience, you know, comes more options. And if you have more income, you're just feeding into your portfolio. So it's just a matter of, again, a behavioral bias that for me led us to this strategy. And I like to share it because it helped us, so I know it does work and it helps other people. So this ties in with the underperformance. Okay, I think we covered that. It ties into the management fees, because, you know, the argument is that there's so much financial BS going on to get to that performance, and you're paying for it. With management fees.
Performance is net of fees. This is why when people give me the fees argument, it's part of the total return umbrella, and we've already addressed that. So it's just a distraction. It's just a sub critique of the total return, which most of it is. This is why I say total return is 99.9% of the critique, if you could put it all in one.
Right. But specifically the management fee, okay, when a regular person is going on the website deciding what ETF to invest in, and they see, you know, the management fee of 0.65 or 0.80. Yeah. So, you know, again, from my perspective as this DIY investor who wants cash flow, I'm also not looking at doing my own options. Just like I never want to trade. I don't want to learn that. I don't want to do that. So For me, I see that to get the cash flow, I'm going to outsource to professionals that manage the ETF for me, and they will do their own options. Again, we've met these guys, they're quants, they're mathematicians. Like, I would never even pretend to understand how they do it. And we'll talk about when we went to the trading rooms of the ETF providers to see how they do it.
It's a good point that you bring up, because it is another critique. Well, you just buy the underlying and write your own calls. Yeah. What would you say to that nonsense?
Well, for me, you're missing the point. I don't want to do that. Just like I'm not going to buy a cow and milk it to get milk. I will support the farmer by buying the milk. I'm not going to, like, I don't see it like...
I mean, that's amazing. You just came up with that out of the top of your head.
Yeah.
Well, I don't want to clean my house. I'm going to hire someone to do it for me, and it's beneficial for both of us.
Exactly.
Right? But this is... People think it's easy. You're just going to buy a stock or the S&P and write a call on it. They have no idea what they're talking about. They write multiple. What about the zero DT? You're going to wake up every day. You know, they write the call every day on the zero DT ones. You're going to do that every day. What about the managing the leverage? You think you're going to get better rates than Hamilton and Harvest, who have 10 billion under AUM? It makes no sense. You think they write one call a month?
Yeah, that's what
and
people
just
think,
roll it? No, they write multiple legs and prices, and they talk to the market makers every day and make sure, and they track it. We'll talk a little bit, because Harvest, actually, we sat down with Paul McDonald and he took us through. I told him, just show me one management of one ETF, and I asked him about MSTE or MISTI. What goes into doing the call for 1 month on one ETF? And we were
30 minutes later.
30 minutes later, he was still talking, and we were like...
We were just looking at each other what is he talking about?
Listen, there's no way you could do this.
Yeah.
Okay? I promise you guys, when you see that critique, the people saying that have no idea what they're talking about.
Yeah, and Paul McDonald is so smart. I mean, I wouldn't even imagine to understand. Again,
that's all they do.
Yeah.
Is this option stuff, and they have math degrees. Nick Picard, a bachelor in mathematics.
Yeah, they're mathematicians.
They're mathematicians.
There's this amazing YouTube video called "The $1 Trillion Formula," and it had 30+ million views. So I'm like, oh my god, I have to watch this thing. It's so many views. It's about the options market. It's about the mathematicians who came up with option strategy from I think it was in the early 70s or late 60s, and it's an incredible evolution, because back then, only those guys had access.
That's another misconception. People think this is new. And that's another criticism. The ETF doesn't have a lot of history. The
underlines have been around forever.
Yeah,
options
but even
markets,
the strategy has. The cover call strategy is the most basic, boring option strategy that literally came out in the 60s. That was very accessible to hedge funds, and because options are a big use of it is to hedge, hedge a bet up or down, right? So people know the cover call strategy is not new at all. It's been around for 50+ years. It's just the ETF wrapper that started coming out in 2011 in Canada, 2013.
Yeah, which by the way, Canada was way ahead of in the industry.
In terms of this strategy, yes.
In terms of having access for Canadians, it's amazing.
Just like the crypto, they were first.
It's true. That's true.
Purpose was first. So that's 1 point for Canada being ahead of something.
Speaking of Canada, I wanted to mention about again, people say just hold the underline or just hold the indexes and do your own. So a lot of people go and it's Blossom, the number one invested ET or index fund is VSP or something.
VFV, the Vanguard,
guys,
of course.
I don't understand.
And the second one is XEQT, which is the BlackRock.
So why aren't people going with the BMO ones? It's the same management fee, 0.08.
It's the same everything. You have some patriotism.
ZSP, ZEQT, which is the whole world. We're saying Z because we're Canadian.
ZZ, I think it's Z. How do you? And anyway, whatever.
Yeah. People make fun
Get rid of your VFV, go with the ZSP, support Canada if you're patriotic. Get rid of your XEQT and go with ZEQT.
I agree. And it's so funny to me that people are always referring to Vanguard. I'm like, what? Not so long ago, I saw this thing online that said Vanguard and BlackRock are the most evil corporations in the world. But are they the best because they have low fees, or are they evil? Which one is it? So I'm just joking here because it's just funny to see the hyper contradictions that go on in the space.
There's a lot of there's a lot of misconceptions in investing. This is what confuses a lot of people.
And there's a lot of people making comments that sound like they know what they're talking about.
They have no idea.
It's very scary. I would have to say that, you know, that's why I don't look at anything, because it's just, I felt like I fell in the trap at the beginning. I would be responding and, you know, with actual facts, and regardless of what you say,
they'll respond
it doesn't
with something
matter.
else. That's how you know they have confirmation bias.
Yeah, there's confirmation bias, which is one of the behavioral biases. They mentioned that one.
So how do you protect yourself with the nonsense? My answer, tell me what you think.
Tell me.
Time and experience and learning yourself will shield you from the nonsense. It's the only way. It's the only way. Yes, research.
Time and data. There's going to be back data more on these ETFs.
Yeah, total returns. You can't lie with that.
Exactly.
You can't lie.
So math and time always proves the naysayers wrong. I mean, so for me, it's just inevitable. Anyways, so we talked about
Toronto or trip.
Hold on. We talked about. We're still talking about the critiques here. We talked about
performance, fees, and doing it yourself.
I want to talk about this funny thing that people say.
Tell me.
It's not real income. I love that one. Guys,
I don't even know what to say about that.
There's one thing I want to say, okay? Seriously speaking, like, if you believe that people today in Canada and the US are not paying rent, mortgage, funding trips, vacations, all the stuff for their kids, hockey, gymnastics, whatever it is, if you think people are not using income from covered call ETFs to pay for all that, it's like you're gaslighting yourself. It's sad. It's sad to me because it feels like it means that you will never consider the income strategy as part of a composition in your portfolio. And it really makes me sad because I struggled with money when I was young. I come from a single parent household. Money was a big problem for us. But more than that, I mean, we moved around a lot. I changed school. It was not a soft upbringing. And all of those, experiences and my own behavioral biases led me to the cash flow style. So because now we're so, we're like, we have so much access to different types of ways to get this cash flow, I wanted to make money off the options and volatility markets. All of this stuff is available to you just by investing in an ETF. It's amazing right now.
It wasn't like 10, 15 years ago.
The fact that this actually exists now is we're so lucky to be alive in a time where you can actually, put your TFSA into an income driver tax-free. Our TFSAs combined are almost at $5,000 a month.
Yeah.
Imagine that, in a Canadian household, how much would that positively impact the household? Just
even if you're not using it, it's positive impact right away, because it's a benefit. If you have an emergency, if you have an accident, if one of you loses your job. We've heard the story. Look at Better Call Paul. He just lost his job. And now he has a 10K a month.
Yeah, imagine telling him, no, sorry, Paul, you have to go back to work. Sorry, you have to find another job. Like Jordan from Covered Call ETFs, he took extended unpaid leave to help his pregnant wife and their 3 children, which now they're 4 children. And he's able to do that from the income of Covered Call ETFs. So if you really believe still that that's not happening, at this point, like, I feel sorry. And out there, if you guys are watching and you understand what I'm talking about, please have the conversation with people, talk to people about it. That's one thing I like about our channel, is that prior to this, in our world, in our life, nobody talked about money with our friends or family. We never talked about money. And now it's literally all we talk about when we get together. We compare, we rebalance with them, their TFSAs. We do all that stuff together now. And it's like everyone is so much happier and so much like lighter, and they feel more confident about the future. Like, we have friends that, she's not going to go back to work after she's on maternity leave. She's not going to go back. Why would she go back? She's making more money in her TFSAs now than at her job. So she has the opportunity to stay home and be there every day, every second with her child while her husband goes out to work. Like, the things that can happen when you incorporate income into your portfolio, and then when you hit financial independence like we did, and there's
more options.
It's one thing that the advisors will, in theory, nobody can ever quantify is what happens when you're financially independent. Because for some people like us, you know, like we moved to Panama, we had the brain capacity to figure out a way to like find a new home base and you know, enjoy life from here.
Our channel started because we had the opportunity we had the time to do that because we replaced the paycheck. If you hadn't quit your job, the channel would have never started.
Yeah, that's true.
Right, because you were working on most of it. I was filming and you did the rest. We wouldn't have time. So it opens the doors. That's the most underrated and the thing I love the most about this style. I still do. Yeah. It's the flexibility you have. It's the freedom, the flexibility you have. You don't need the cash flow. You could reinvest it. Reinvest half of it. Spend half of it. The choices are unlimited. And then once you hit financial freedom, life 2.0 starts. Just to go back, I gotta say something about the it's not real income critique. Obviously, we know who it is and who said that. We did a response video on that. It's really strange how, so everyone who's watching and has been in cover call ETFs and is getting their monthly cash flow and income knows it's complete nonsense. Right. But I'm trying to put myself in his shoes to understand why he's saying that. So maybe he's saying it's not real income because, well, think about what is the distribution or the dividend? What is the dividend or distribution that comes out of HYLD or HDIV or HHIS or anything else every single month? That is really, because the counter argument, of course, his counter argument is buy the indexes and draw down. Right. Right. We could all agree on that. That's what they say. Just buy the indexes and draw down.
How many millions do you need to do that?
That's a whole other thing that's very hard to quantify, and that's why you need the advisor and that there's the 4% rule. Not in this day and age, probably like 2-3 million at least, maybe even more, depending on your lifestyle. But it's limiting. That's what I don't like about it. It's gatekeeping.
There's no flexibility.
There's no flexibility, or much less so. Yeah. So going back to that, so what is the distribution you get is really part of the net asset value that they're taking out. That's why on ex-dividend date, HHIS's stock is going to go down 25 cents or now 26 cents. HYLD stock goes down by the same amount because it's like they're selling some of the shares, part of the net asset value, and giving it to you in cash. Right. So it's kind of like exactly what these people say to do. Draw down. That income, you don't want to call it income. You could say it's part of your return. It's part of your NAV. That would be accurate too. Yeah. But I think what they're doing is they're just playing on semantics, just to confuse people. Technically, is it income? The fund makes income with those premiums, and that goes to the NAV, and then part of the NAV is being returned to you every month. So is it income per se? I would say it's indirectly income, but either way, it's cash flow showing up on your account. But guess what? What they say is buy the indexes and draw down. But that's exactly the same thing. It's just it's the same exact thing, except you got to do it yourself. You have to do it when the markets are down, where this system is more like almost like an automated drawdown system. Yeah. So I just want to say, like,
no, I agree with you. It's a good point because
there's a lot of nonsense semantics there.
Yeah, again, in the financial world, there's a lot of theory, and you know, you could live inside your Excel sheet all you want, and you could do all those calculations, and then you have the reality of life. And circumstances and all that stuff. And I understand, like, when you know, there's that sensational title like it's not real income, to get the clicks and to get the views. And in reality, they're talking about how it's not real income. It's actually just like a drawdown, you know.
I don't really remember why he's saying it's not really income.
Yeah. But regardless, it's like you say, it's an automated way of drawing down. You're not selling the shares.
You're not selling the shares.
And during consumption phase, like, again, I would love to know if someone is actually drawing down from an index in their retirement, because I would be very fearful of not having enough shares by the time I die. I don't know what's going on there, but
I would hate selling shares if the market would be down that week.
It would be very, and it's an emotional thing. I wouldn't want to sell my shares and then you're just literally drawing down, you're melting it down. Whereas opposed to in the consumption phase for an income portfolio, it's generating premiums and you're buying new units when you are
more efficient, very flexible.
It's very efficient. I would say that it's more efficient. Yeah, and there's nothing wrong with going in the indexes, but go with the BMO ones because why not? And drawing down. Again, I don't know anyone who's been doing it. I would love to hear from someone.
I've heard from people doing it and they don't like doing it and they switch.
Well, that's it. They switch. Yes.
It's very rare that you hear the opposite. Correct. I guess it is true. And my message to them, I'm not going to say like Ben Felix, no, it's the right or wrong way.
Exactly.
The right way is the way that works best for you. Some people do a hybrid approach also. Yeah. That they're comfortable with that.
Yeah.
Right, they'll drawing
most down. Most of the people will do a hybrid approach because
a lot of people, yeah.
I mean, because we are real people and we have, we want flexibility and that's just reality. So okay, we'll go to one more critique and then we'll talk about the Toronto.
What's the last?
The last critique? Taxes? No, the last critique is about us personally, about how we're misleading people.
That we're shilling and misleading people.
We're misleading people because we don't actually live. I'll give you my opinion on
live off of our portfolio.
Yeah.
Go ahead.
So basically, I would like to say that I think that judging people for earning money is a shame. I think that's shameful. I feel sad because we live in a world where you're judging people for trying to earn money. I mean, we're not in a communist society
not yet. Tax the rich.
Hopefully, we're not gonna get there, but I just feel like, you could say what you like, but I view the portfolio as our balance sheet. All the money goes in there and then we do our calculations and the revenue will come out and we'll pay all our stuff. Again, I'm using my hands a lot because we are Italian.
We are Italian,
so
yes.
That's gonna happen for sure. But, and regarding the sponsorships, like we decline pretty much 99% of the sponsors. And we're very selective and we're going to be even more selective going forward. But I personally go with these sponsors who we're partnered with now, which are mainly the ETF, Canadian ETF providers.
That we like.
I go with them because I actually want to talk to them. I want to have access to them. I like going on the calls when we talk about which videos to sponsor or whatever. Because I want to look them in the eye. I want to know what's going on there. I want to be able to have access to them because
our money's there.
Our money is there, and we also want to give you guys, the audience, the same kind of access. So we're asking the same questions as if we were investors. Because guess what? We are investors. Everyone knows our portfolio, what's in it. So it's not as if we're not investing in, or we don't put our money where our mouth is.
Exactly.
And I just wanted to say, like, very selective.
Very selective. For us. We chose our sponsors. Yeah, that's how privileged we are now.
This is what I wanted to say.
Go for it.
When originally we were just two idiots doing
from the East End.
Doing videos, and we didn't know anything about sponsorship or anything.
Nothing.
We researched these covered call ETFs. So we actually did the legwork. We researched. We started doing videos on them, and we were approached. They seeked us. I've never seeked anyone out. They've always seeked us out. So
special shout out to the first three it was all like within the first month. Like it happened when we were in Panama the first time, I believe. So it was Hamilton, BMO, and Harvest. I just can't remember who was actually first. But one cool thing is that I believe it was Hamilton helped us get the contacts for everyone else, and we started reaching out. But here's the thing: what a lot of people don't know, and that we learned, all of them talk to each other. Yeah. They're all in one square mile in Toronto. Yeah. They all talk to each other. They have healthy competition. Yeah. As you guys have seen, a lot of employees go from one firm to another. They're expanding, so they all know each other. They all talk to each other.
They all read the comments.
They read the comments.
They want to. Their number one thing is having a good reputation.
Yeah, and they want the feedback.
They want the feedback because they value your opinion and they want to do good. I mean, these people are not the enemies. Like the Canadian ETF providers are not the enemy. They're trying to do like I see it as a service to us Canadians because we're very fortunate. We live in Panama right now, and in Latin America they do not have access to invest in the American and the Canadian stock market, it's a limited amount. Like I'm talking about through the banks, you have to have a certain net worth to be able to have a brokerage to connect to the American and Canadian stock market.
It's not accessible.
They don't have budget brokers like we do in Canada. They don't have ETFs that they can invest in. So I think that, and we talked about when we were in Toronto, we talked to Moomoo about that, about coming to Latin America, because it helps the average Joe connect and have access to all of these wonderful things like ETFs.
Yeah, even just investing in the S&P 500.
Yeah,
we talk to people who would love to do it here. They don't have access, or it's very hard. It's very hard to do that. So what do? Most people buy real estate here.
Exactly.
That's the very hot thing, and it's growing. There's a lot of construction, but the returns are not even close to the S&P 500.
It's a mess.
It's a mess. Plus you have to deal with all the stuff. But where were we at in terms of...
The misleading,
So these are my... do you have anything else?
No, just how we operate with our portfolio.
Yeah, so the critique is like that now because we have the YouTube revenue.
Right.
And you do your coaching sessions and you sell stuff, the digital product, and we have sponsorships, that you're not living off of your portfolio anymore. Again, this is, playing with semantics, trying to... They say we mislead people, but they're intentionally trying to mislead people.
They gaslight.
They gaslight, because we were at the beginning, yes, we were actually using a good portion of the portfolio to replace your paycheck. And then because of that financial freedom and the privilege, we were able to start the channel, which it took us 10 months or 9 months to even make our first $100. And then everything started coming in, the flood of sponsorships, and then we created the digital products because, we didn't talk much about our past, but me and you, we were pretty entrepreneurial. We were hustling at work at the beginning. Maybe we could talk about it another one. So it's in our nature to be entrepreneurial. So yes,
and the opportunities were there.
The opportunities were there. They came to us. We grabbed them and we expanded on them, but we're always do them for the benefit of the audience. That's why I always try to have them on the channel, et cetera, et cetera, et cetera. So my point is, now how I see it, can I say that we're living off the portfolio? I still say yes and see it that way, because the way I see it is the portfolio is our main basic paycheck. Okay, everything else, the YouTube income is extra. It all comes in 1 month, all comes into the same big bucket. We pay our living expenses and reinvest the rest. So are we technically living off of our portfolio? Some people could see it as no. I see it as yes, but that's the monthly routine. It's up to your opinion, what you make up of it. But we've done the calculations. If we stop everything, we shut down the YouTube channel, we stop everything, we will still be able to comfortably, even in this nice penthouse, live comfortably just off of the portfolio, and we would have probably an extra, I think over $10,000 a month of extra.
To reinvest,
To reinvest. So I say that's when people say that, they're trying to mislead. They're trying to attack us because what? Because we're successful and we've created a little business out of it. You know how many people I know that became financially independent? I know because I do this coaching session. Became financially independent because of PII, and then opened a business. There was one in Vancouver that opened a little tourist business, or they bought a piece of real estate, or some of them continue working. Are they living off of the portfolio? It's all semantics, right? It's not about that. It's about getting the financial freedom and having the ability to do other stuff.
I guess
I know that was long, but it's important.
It's like excuses.
It's like excuses,
But I mean, you've been quietly like helping 3 people a week through your coaching sessions and leading them to...
and it could be 10 or 15.
But why would... exactly.
But I got to limit myself because we have other, other thing. I got to make videos and stuff, but the demand is there. Like when people say that you don't need these ETFs, you don't need this system, well, I don't know who you're talking to, my friend, because everyone I talk to desperately needs something like this. And this session sold out in 1 day. It's even getting more and more demand. So,
and every testimonial can, resonate. I remember watching Luke's testimonial, And, I remember us at that time where, it was very similar story. His wife is working and she's unhappy there. It was the same thing with us.
They had a house, they was paid off or almost paid off, but they were stuck in it. They were having problems, no cash flow. And similar.
It was, I remember I remember back then you were worried, for my mental health, and you could see that through Luke, and you guys are trying to provide, and it's stressful.
We need to do more, so it could save you.
The income is like, it's a second income stream, and it could replace her income, and she can quit her job and she could focus on,
For some people, it's a lifeline.
It's a but it changes.
Lifeline.
It changes
you have
everything.
An emergency.
Yeah.
I mean, we've heard it all. We've heard so many things. So
Monique's testimonial was also very common. Single mom, 3 kids. She went from a single income household to a dual income household now with the income from her.
By being responsible, not going shopping Questrade instead of Amazon.
Right.
It's very simple. You know what I mean? Yes, it's slow. It takes years, but you'll get there. Yeah,
and also Tim, he it was like a 3-part testimonial.
Yeah, he was so popular.
He was so good. He was so good on screen, and he was able to retire early. Then he
was a hit.
He effed off. They went to Tokyo, him and his wife.
I emailed him. I told him, your testimonial's a hit, my friend. No response.
He's gone.
I remember he's touring all of Japan and China and for who knows how many months. Because
and that's
he fired his advisor and said, why should I just? I mean, you know what I mean. So
self-direct is more about it's like you're self-empowering, and you're becoming more independent. And a lot of times, on the socials where you see these back and forths, I always say that the income investors are not on their socials. They're all living their life because they have the cash flow to do it, right? So, okay, well, I think that's good for the critiques.
Yeah, I think that's enough critiques. Let's move on to more fun things like the Toronto. We got to talk about that because it's going away from our memory because it's been over a month now.
Yeah.
But it's still fresh because it was when we went to Toronto, we were planning to go to the Blossom event in Toronto. We were invited to go on a panel. So what I did is I suggested, let's go a bit earlier. Let's stay 3 days and we'll visit with all the fund managers. Right. Unbeknownst to me, everyone want to have lunch, want to have dinner. So our 3-4 days leading up to the event was jammed packed. We had to refuse having lunch and with providers and stuff. But it was really, really interesting. And it was really cool. So let's just go through the days. You want to do that?
Yeah.
Wednesday, the first place we went to was Global X because I do some filming for them. So
yeah, they have a nice studio. It's like legit. You go in and they have all the equipment. And Lana, she's the head,
media person. Yeah,
she's like a mini Martin Scorsese there directing you. She's so cute.
Yeah. I was literally in a room with her for 3 days. She was literally like my wife for 3 days, and she was giving me direction. Do this, do that.
You were sweating. You had to change your shirt.
This shirt. You got to have a new shirt because the microphone. She was getting angry because the microphone was all falling off because I brought my bamboo thin shirts. She was a sweetheart, super nice to work with.
She had a little intern, Michael. Yes. He was born in 2005.
Imagine being born in 2005, guys. After the internet, you're born with the internet. Yeah. We're early. Well, I'm 85. I'm 85.
Elder millennials.
Millennials. So we grew up with the internet, but also without it. So we're kind of like street smart as well.
Yeah, but you see, these young people, so Michael, he's like talking back about ETFs and everything.
Yeah, they're learning. By default, they're taking in knowledge.
Imagine a whole young generation. This is why I like Blossom, because regardless of how you invest, but a whole young generation that actually knows what to do with their money instead of like going and spending it all the time, which is great. I mean, you need that.
So tell me the feeling, because I knew this was going to happen, because I had Global X flew me to Toronto 5-6 months ago to do the filming, and I walked in there. I got hit with all kinds of nostalgia, good nostalgia, bad, by the end of the day, bad nostalgia. But tell me the feeling when you walked into the office.
Well, first of all, we walk into the building. Our phones didn't work because our eSIM
didn't work.
Working, but we figured it out afterwards. But anyways,
of course, because we're street smart.
Yeah.
If it was Michael, he would have went home crying probably.
That's not true.
We had to tell the security guard, call Amy, bring her down.
Yeah, so already it's like the annoyance of
already we're annoyed. Plus we had to wake up. No, we woke up. Didn't wake up that early.
Remember. So yeah, it was just a classic, a typical cubicle life there. You know, you got some closed offices for the VPs, and then everyone else is in cubicle style.
We brought people chocolates
and
from
I brought
Panama.
people chocolates from Panama. I love that. Every time I go, I always bring something, and they're always like so surprised. But I'm Italian. I have to bring some. We have to bring stuff.
Either food or cash. That's it. Those are the only two things you're gonna expect: food or cash.
Yeah. So
that was fun. We did some filming. We met the CEO. Then we had another event at the National Bank, but we'll go by day. So yeah, we met some people there. We met the CEO. We met Lana and Amy, of course. Amy's Jonathan, the one who's now went to work for the Toronto Stock Exchange.
Right.
So yeah, I mean, it's cool to see. There was a lot of young people there.
And everyone's happy, young. You know, when I was at the office, we were outsourcing, so it was kind of like on the decline.
It was a decline, yeah.
But on the finance world, everything is booming.
They're hiring and they can't find people to fill the positions.
Yeah, it's a real problem.
Yeah, so
we that was during the day, and then we went to meet for dinner. We had dinner with Hamilton.
Then we had our official first dinner at Hamilton, and of course this is in downtown Toronto, and you know they treat us nice. We like
we're lucky. We're spoiled.
They spoiled us. We went to the really nice restaurant. So the first dinner was with Hamilton ETF. So everyone was there. We walk in. Rob was there because he had to see us before, you know, he had something. He's like semi-retired now. But there was Rob, there's who's the co-founder, there was Jennifer, who's a co-founder and co-CEO, then there's Patrick Somerville, Nick Picard, Louis from marketing. Am I missing anyone? I hope not.
No, I think that's it.
So first of all, tell them about, you were looking at the restaurant's menu. You knew what you were going to eat like a week in advance. You're like,
no, not a week. I was looking at it that day. I was like,
tell them the audience what you wanted to have.
It's not a big deal. I never had Wagyu steak, so I saw it on the menu and I'm like, okay, I'm definitely
going to so then we sit. I love this part because we sit down, and the menu is you could take like this giant steak shared with several people, and I'm like, oh, you want to take your own thing, and then Patrick's like. You tell Patrick, and Patrick's like, no, Erica's gonna have her own thing.
No, I didn't even know you guys were splitting. I'm like, I told the waiter right away. I told her, I want this.
Yeah, and then when Patrick was talking to Jennifer, he's like, okay, we'll get a big steak. Yeah, but Erica's choosing her own. They were so nice to you. Like they're so nice.
Yeah, they're super nice. Yeah.
Canadian, down to earth, humble, and you sat next to Nick. I was next to Louis in front of Patrick, and we were just talking about all kinds of the industry and all kinds of stuff.
Yeah, Nick Picard is so great. He's been to Panama, I think, a couple of times with his wife, where we were talking about the coffee here, boquete. It's
amazing coffee.
Yeah, you know, we were talking about how we both, because his family is from France, and we both would drink Italian coffee, but then when we tasted the coffee from Panama, we're like,
we ditched Italian coffee right away. Yeah.
It blew our mind. So he's super nice, and you know, we were just talking about personal stuff. Then we started asking him about the 0DTE, and that day was like the Fed day.
It was a Fed day, and he was telling us he had to go into the office early because he wanted to check and figure out which strike price to choose. They do that every day. So
and you're saying that I could do that on my own? I don't think so.
Let's wake up every day and select the strike. Yeah, you got to be out of control.
Yeah. So
and Patrick's, I mean, they're all just super humble because. I didn't know this, but they kind of struggled at the beginning. They were, you know, they had some Canadian financials ETFs.
HCAL was the breakthrough.
Was their breakthrough. But before that, they were in a very tiny, like one or two person office, and they were crammed, and they were, I'm not saying they were struggling, you know, that they couldn't afford food,
but it was like a startup.
A very slow startup, and
HCAL was a breakthrough, but they have so much experience. I mean, Rob was working at the bank before that.
Yeah, he's a bank analyst.
So, and I love those stories. I love that startup vibe story, and now they're hiring, they're changing, they moved office again to a bigger space. So
so they took us on sorry to interrupt. They took us on a tour a few days later they were in the middle of the move. So when we visited them, I think it was the next day or Friday.
They were literally moving the next day.
They just had boxes and everything. They're expanding, they're hiring. So we met the trading team. We had already met Nick, and we had it on our channel several times. Rob as well, Patrick as well. But they've expanded their options team. They got someone from Global X, you know, joined their team now, experience. So they're expanding, and their new office looks amazing.
Yeah, I mean, I would work there. It looked so
super nice, sleek office, and They're hiring, they're Canadians, they're down to earth, great Canadians, they're hiring Canadians.
They pay Canadian taxes.
They pay Canadian taxes, they have a lot of expenses with the lawyers and stuff, and they're really interested in what the audience likes and what they need is more important.
Yeah.
So they're always looking for our feedback and looking at the comments. So it was just a super nice dinner with them.
Yeah.
So that was Wednesday. Thursday was our pure harvest day.
Yeah, well, after that I went to the gym and then because I wasn't gonna be able to sleep. I was like so amped up, and then I had to go to the gym do a cardio because the next morning we had to wake up super early to go to the ring.
When's the last time we woke up that early?
Oh, we woke up early to go to the flight and everything. Like, he's exaggerating. But I've waken up early to see the sunset, the sunrise.
Not me, but anyway, we had to wake up to go open the market with Harvest, which was really nice of them to invite us. And by the way, guys, if you want pictures of the Hamilton dinner and the Harvest, it's all on our Instagram. So go check it out. We'll put the links below. So we opened the market. That was fun.
Yeah, it was nice. And
we pressed a button. That's about it. Definitely not like New York. But
no, it's definitely not like New York. That's something that I gave feedback because the experience in New York,
it's special.
It's very special.
It's history there.
And they really make it like a spectacle, you know. So in Canada, I'm sure they're gonna try to get to that because
they should.
They do hype you up. They're like, you know, you gotta start yelling and clapping and pretend like you're, you know.
And the confetti comes down and stuff.
Yeah. But the fun part was after that when we went to Oakville. We went to go visit the office.
Yeah. So if people don't know, Harvest is really we resonate with them a lot because it's Mike and Mary is. Yeah. They're a husband and wife. They're the founders, the co-founders. Yeah. So we connected with them a lot. And Oakville is like 30, 45 minutes away from the center. Harvest is one of the only ones that's not in the downtown core. So we went back to our hotel room and they offered us, they came pick us up and they drove us and we took their...
Yeah, I was sitting in the back with Mary and she told me the whole story about how Harvest was founded and everything. And really, really amazing conversation. And I like to, I love talking to people that are smart, successful, because it takes a lot of work, but you know, they employ people and they give back to the community, and like it's worth it. It's definitely worth it when you see.
Yeah, they do a lot of good things in the community. Yeah. They don't advertise it, I'm sure. People don't know, but they do a lot of good stuff, and you know, they deserve their success. The hiring. Then we went to their office as well, and we took a tour. We did a little video.
They have a great team. Carolyn, the marketing team, she's the best. You know, Paul McDonald, he's like so meticulous.
Oh yeah, the trading room. Yeah, tell them about that. We walk in this trading room, and you know, there's 4, 5, or 6 of them, but Paul's the boss there, you know, chief. He's the guy behind HHIS and the single stocks. And there's a couple of fund managers. Everyone has their own, like, one guy will take care of the brands and tech, and Paul is like kind of the supervisor over everyone. But we sat down with him, you know, in front of the Bloombergs, and like we said earlier, just show me the process for one ETF in 1 month, and that was like what, 45 minutes.
Yeah,
we understood 45% of it, but there's a lot that goes into it, guys. A lot.
Yeah, the one thing I like about the Harvest line is that they try to have, like, you know, Paul is not trying to do so many calls. Like they're trying to replicate the underlying as much as possible in terms of performance, but also give you income. So they are really trying to match the underlying, actively do that. So I like their line of products because of that. And the same way I like the Hamilton products because they have like the 0 DTE.
Innovative.
But the HDIV and HYLD.
Amazing total returns.
Yeah, it's very... you know, it's just nice to see that these products are available now. I mean, it's a complete game changer for DIY investors.
What I love the most, and I've noticed this especially on the smaller shops, like, well, they're not that small anymore.
Well, they're not small anymore.
But Hamilton Harvest, they can move quickly and they could innovate and change their products. Look at HDIV. We're on HDIV 3.0 now. People don't realize HYLD 3.0. At the beginning, they were completely different, not as good. They in-housed everything. Look at the HHIS. They added 4 new
Exactly.
stocks, and they came out with a .u, and you know what I mean. So
the agility is really good. It helps to be a smaller shop.
they have 2 people just answering the phone,
Yeah.
which they showed us. These are 2 people just take phone calls all day from their 1-800.
From you guys, yeah.
From the
From the
1-800
inbounds,
number,
yeah.
and they're like, we wish
And
we could
emails.
say more, and say, but they have a lot of compliance. That's one big takeaway I took from having dinners and lunch with them. They have a lot of regulatory compliance, which kind of protects the consumer, but they can't say a lot of stuff that to me is just, for example, they can't talk about yield or performance unless the fund's been out for a year.
Yeah, it's
I
so
think that's just
silly.
complete nonsense, right? Things like that. So it was a great day with Harvest. Then we went for lunch. With them, we had a nice lunch.
Yeah, they paid for our Uber back.
They paid for our Uber back and our lunch.
Yeah,
and,
it's super nice.
Very generous, very generous.
Both Hamilton and Harvest, it's more of like a family vibe. Like everyone's so happy. Like they're talking amongst themselves, and it's just like refreshing to see, because back when I was at the office, like I said, we were trying to outsource, so people were leaving all the time.
It's
like,
a different vibe.
Towards the end, it was so sad, like on a decline. But here, it's like everyone's super happy.
Yeah. When you have 10 to 20 employees, it's much different when you work for a giant corporation.
Right, it is different. I see that now, yeah.
And then so then that was Thursday. Did we go for dinner on Thursday? I think
we went with
we had a drink.
Keith
Yeah.
and Teddy from Evolve.
Yeah.
And they were talking to us about Biggie, and I was asking all kinds of questions like how do you go from zero to launch, and the guy Teddy, I think that's his name.
Yeah,
Ted,
like what is he, 20 years old or something?
So cute, like so handsome, or like a little finance bro, and
yeah, he was like a little mini Jordan Belfort or something.
So cute.
Really cool people as well.
Yeah, he actually lived in Dubai, that young man. So he's very experienced, world experience, and so it was nice to see, talking to these people again, talking to smart people, high IQ, good work ethic. I like talking to people like that.
Similar story with Keith, been in the business for a long time, long time. And, Raj wasn't there, he couldn't make it, but I had a recent Q&A with Raj as well. But it was interesting, they're even a bit, I think, smaller than Hamilton and Harvest.
Yeah, it's interesting to see, like, in my opinion, like the rise of those, like, even 9 Point and all that, but
9 Point's another one where we didn't have time to meet with them, unfortunately.
But like I said, I want to meet them because I want to talk to these people, because if money's flowing in there from our channel, I want to know what's going on. I want to ask them who their succession is and all that. So I get a lot of my the vibe, the energy, but it's and it's always the top people we're talking to. So they're they care. The co-founders and founders and the CEO, they're going to be there for a long time, and they're going to ensure that everything is sustainable. So
Friday we had lunch with Moomoo.
Yeah.
Which was a lot more interesting than I thought it was going to be, to be honest with you. We were at the restaurant for like 3 hours. At one point, they had to kick us out.
They had to kick us out.
They're, so with them, I'll be honest, there's a culture difference. They're from China, but they live in Toronto.
Yeah, they've been in Toronto for years.
But we talked to them about, the difficulty, because the perception is that it's from China and everything that. But if you actually try the Moomoo, it's amazing broker. Like if you're into quick analysis and doing some trading, like it's probably one of the best.
The interface is really good. It's
very
like
nice.
a mini Bloomberg almost.
And they were very, very impressive people as well. And they had a lot of questions for us, and we gave them a lot of insight, like you said, about Latin America and expanding and expanding Moomoo elsewhere and functionality, things like that.
Yeah, because they're she lived in Midori lived, I think, in Singapore and Bangkok, and EJ he's been in Canada for a long time now. So I like just talking to people, because like us, we moved from our homeland elsewhere, so we're just trying to be like efficient in the way we do things and having certain accesses versus not. So it was just a good conversation.
We talked a lot about non-resident.
Yeah.
Because people, Moomoo is our broker sponsor, if you will, but it's because we choose our sponsors. Right. If we're having a good time and a good relationship, I'm going to continue with that sponsor. If we are not, goodbye.
Which has happened, but
which has happened very rarely, but it's happened. So we're going to continue with them. They asked us a lot of questions about the non-resident, and they learned a lot because we were saying we're non-residents and their systems are a bit newer, so they don't have all those tax implications all set. So we gave them a lot of valuable feedback, and they were very, very appreciative of that, and they were listening, and very, very smart people, and good ideas back and forth. And the theme is the same. They want to make everything better. I mean, there's a lot of competition now. There's Webull, there's Wealthsimple, there's Questrade. So the feedback and the conversation was like 3 hours, and it was really good.
Yeah.
And the food was good too, of course. Italian restaurant.
Nice people.
Nice people. And then the dinner was the Global X dinner.
Yes.
Right. So we went to a steakhouse, I believe. And it was, Lana was there, Amy was more the marketing people, Stephanie, the boss. And we had some steaks, we had some drinks, and it was fun. I can't remember what we were talking about. I think it was more or less about work.
Yeah, it was more social, I think.
More social.
It was more of a social thing. It felt more like we finally were able to relax a little because we known them for a bit now.
Yeah, because there's a bit of a difference when you're talking to portfolio managers, CEOs, chief investment officers, versus more the marketing, which Global X, it's more with them. The portfolio managers are a bit less accessible. Obviously, I did a Q&A with Chris, the head guy, but he wasn't there at that dinner. But we had a great time with them as well. Super nice working with Global X as well.
Yeah.
They told us about, the business as well, because they're like a medium shop. So you have Hamilton, Harvest, Brompton, Evolve. Those are like the small 10 billion, 7 to 10 billion. Then you have Evolve, which is like medium, which is 40 billion. And then you have like BMO, BlackRock, and Vanguard, which is 1, 2, 3, and nobody could beat those three, right?
Global X 40 billion.
Yeah, Global X Canada 40 billion. Because what we learned from there, and this is after talking to the CEO. So Global X is a South Korean company, but that's just the head. They do whatever they want in Canada. In the US, they do whatever they want. In Australia, they do whatever they want. So they kind of have a separate company, but it's all tied to the parent, and they do whatever they think is best. So it is Canadian, Global X Canada, and they rebranded. So they have good stuff too.
They do a lot of market research. They're the ones who told us about how the DIY investing is like, basically now a lot of Canadians are getting their financial information from YouTube as
number one source.
Number one source is YouTube, So where previously it would be like to financial advisors and whatever. So they do a lot of market research, and they look at the markets and landscape. So they're big. They have a lot of, They
got more money.
They got money,
They got more money, more power, more influence for sure, if that's a thing. But I guess it is. But then, of course, BlackRock is number one. And then we went to Montreal. That was...
No, but you skipped over the Blossom event completely.
Oh, of course. The Toronto Blossom event. Yeah, then we did the Montreal.
Yeah, so the morning of the Blossom event, tell the story about...
So Jordan from Cover Call ETF Investing messaged me and says, look, I'm having a little PII get-together, and it would be really cool if you would... And they were having breakfast like a block away from the Rogers Center.
And they were all going to walk to...
They were going to walk to this. So it would be really cool, like show up as like a celebrity guest and whatever. It would be amazing. So we did that. We crashed the breakfast, if you will.
In the morning, we were going back and forth because he had to go do some promo.
Well, Blossom said you arrive at this time so we could show you around and do it. And then we're like, screw that. We're financially free. We don't have to do anything.
Yeah, I said, I'm not doing that. I want to go to the breakfast. I want to bring the merch. I want to see everyone. I want to talk to them. And exactly what happened, I was talking to everyone. And one person she was a teacher, and she was just talking about how, financial literacy is like a non-existent. It only exists on the internet, and how she appreciated the way you explain things in layman terms, and it gave her the confidence to go and self-direct, and now she has a plan and she's super happy.
Yet another story.
It's just another story. That's what I love. I love hearing everyone's story. When you say that the Toronto trip really lit a fire. For me, it was because hearing the feedback, and that's why I'm coming on camera now, because I want to encourage more people to come forward, more women to watch. I would love to hear more from you guys, to tell your story. We want to do more testimonials. You can email me directly. I'll put my email address below, erica@passiveincomeinvesting.ca. I'm old school. I'm not really on the socials. I prefer email, corresponding via email. And again, I take everyone's story, I take it in my heart, guys, and it really fuels us to keep going, to just continue with the educational content. We want to be able to be more selective with the content as well.
And guess what? It helps us create the content and the questions we get, and you know,
Yeah.
so it helps us. It's a win-win for us as well.
Yeah, and I enjoy talking to you guys because we have something in common. We're complete strangers and we're talking about what's in our TFSAs. So I think that, you know, if it's one thing I would tell the audience is to keep talking, talk to your neighbors, talk to your friends. This conversation about investing has to happen, about money has to happen. I believe that it's imperative. I mean, it's not something that we should be hiding behind or whatever. If you can help someone, you should. Because again, I didn't have the help. I keep going back to it because I didn't have the help. My mom didn't have the help. And if we did, you know, a lot of, you know, struggle could have been avoided.
Yeah, sure.
I am where I am now, but, you know, a lot of that stuff could have been avoided. So have the conversations. I mean, continue talking. So yeah.
So Blossom.
That's what I wanted to say about the Blossom event. I love talking to everyone. This guy's he's a celebrity. He gets there. People are wanting
unbelievable.
pictures.
We didn't even go in yet. People were yelling at me from across the street.
Yeah, it's so strange.
And I'm like, who's this? These crazy people? And it was like It was.
Yeah.
I've never experienced that.
It was very strange. Yeah.
It was just that day was a blur. I was invited to a panel. Did the panel
with Ian. Nice guy.
Yeah, very nice guy. But the whole day, everyone just came up to it. Like I didn't even have time to meet with some fund managers that I wanted to talk to.
We met with Michelle at Brompton.
Yeah, for 2 seconds.
Yeah, we talked to Aaron at BMO.
I wanted to, but it was it was a crazy packed day. I think everyone was surprised by how many people and the success of the event.
It was very fun. Yeah.
I think it would be dumb for them not to do it again next year at the Rogers, and we'll probably be there. Hopefully, we'll see what happens, and we might have some maybe something very, very newsworthy coming up very soon. We're working on it, guys, but something very special for you PIIers out there. Which my voice was dead. By the time I did the panel, I was worried. I was going around looking for gum at one point. I was like, how am I going to talk?
No, but they had a little room with water and stuff.
Yeah, with hot dogs and water and chips. And I got a little Blue Jays jersey.
Yeah, that was very nice of Blossom.
Yeah, Blossom did a great job. And
they did. The marketing team is really good there at Blossom. Those guys are good. You know, it's a social revolution or whatever you want to call it. I was surprised they didn't have no mainstream media was there. I mean,
maybe next time. I think it's crazy that there's no.
They're on Forbes recently, actually. So
I wouldn't be surprised if there is next time.
Yeah, I think that it's good. Like I said, the education part is good. The little toxicity. I mean, it's unavoidable. It's human nature.
It's unavoidable, but Harvest. Everyone was there.
Yeah,
Fidelity,
at the event,
BMO, Harvest. I mean, there were so many that were there. Even Brompton was there. 9 Point was there. BMO was there. Global X, of course, they were set.
They had the great booths. They had the great real estate right there.
The trading, the Beta Pro, and then just the investing side. So they
by the way, we couldn't participate in the. It took so long for you to get your access to the biggest winner.
Yeah, because we're non-residents and the IP, and
they wouldn't accept our
either way.
IP. Anyways,
nobody wants to hear about that anyway.
So it was a success. The Blossom
event
was
super successful. Then we took one day off for us. We found a restaurant that we really liked. We kept going back. What is it? Terrano's?
Tonelli.
Tonelli. Anyway, it was really good. The pizza was good. The pasta was good. The meat was good. So we just kept going back there. We had one day of relax. Then Sunday we went
to the gym and then we went out to eat and we went shopping. I had to buy a coat because I was freezing.
We were freezing. Yeah. Sunday we took the plane, went to Montreal. We went to the wrong airport.
Yeah.
We had to go to this little crappy rinky-dink airport in the middle of nowhere. Yeah. Anyway, we got to Montreal, and then Monday was it was an event planned by Global X Canada with the Finfluencers to present them data research that they did. So it was very nice of them. The CEO was there, Stephanie was there, and a bunch of
Amy was there.
Amy was there, of course, and there was a bunch of execs from National Bank too, who gave us some insight as well on how they have so much regulation that they're so behind Wealth Simple, for example, but they don't want to be. But it's just because there's so much regulation. So we were shooting ideas around. We had a nice lunch. Of course, the Blossom kids, we call them kids because
they're so much younger than us. We were there on time. We were dressed up.
We were there on time. They were like an hour late. Everyone was freaking out. Like the lunch was getting cold.
They just took the train in. It was so funny.
Yeah.
But they, you know, the
Took pictures of that too, by the way,
Yeah.
on Instagram, guys. Go follow us on Instagram.
Banque Nationale, you know, they wanted to talk to the finfluencers. I cringe when I hear that term, by the way, but they wanted to talk to you guys because collectively you have about 10 million followers.
You guys, you're included now in that.
10 million followers. So they wanted to know, like, how did you guys start, you know, and why do you have so many views, and what do you think sets you apart? Like, they wanted to know what the hell is going on because they're losing business.
I remember my answer. I was the first one who answered. We're just being honest in ourselves, and we have no compliance, unlike you guys. We kind of do on YouTube. There is
that's true.
You can't swear and whatever, and we've had some issues with that, but not as much. But let's just say we have like nothing compared to them, where it's like a million lawyers have to see even a commercial that they do. It's like ridiculous. With a million disclaimers. So that's what I said. That was my answer, and they're like,
yeah, I mean, that was pretty much the typical answer is just being transparent and being very honest with your journey, and people resonate with that. People want to see what other people are doing. I mean, it's not rocket science, right?
But I'm just thinking of that day, like Rohit was freaky. He's like, where is everyone? and we were just dying of laughter because we're like, these are just kids. And like, it was just so funny. It was a nice place. It was a brand new building and stuff. And then we took pictures.
It was at the executive lounge, and they had this amazing view. The view is on Instagram.
Just to get in, it was like Fort Knox.
Oh my
God,
God,
they didn't know
so much security.
We didn't know what it was called. We had to call Amy again to come and get us. Like, we're here and it was French, so we're like, finfluencer,
influence,
Blossom. He was looking at his list because there was a few events there. Non, je sais pas. I'm like, what's going on?
Anyways, after that, like the day after was the Blossom event in Montreal.
Yeah, and that was like our hometown.
Yeah. So we got to see a bunch of people that
we saw 5 years ago or 2 years ago.
Yeah, 2 years ago at the Montreal event, and that's why we go. We want to talk to everyone, and and
some of them have their own YouTube channel.
Yeah, some of them have their own YouTube channel.
It's not just us fighting the good fight.
Yeah, I actually got an email 2 days later from someone that was at the event saying, "Oh my God, I worked for you at CGI."
We met people that we used to work with. That you were the boss.
I was their manager, and
what did
the guy
they say?
said, "You're still helping people after all these years." I'm like,
I tell you all the time, you're a good person.
Yeah.
When you were a manager, we both became managers, and just a high school diploma, by the way. So
I went to Herzing.
For programming, not for management. And whatever. You had 100 people under you. I had like 40. 30.
I had 100 direct reports.
Not like we just got promoted. Bottom to senior to team leader to manager to senior manager. We did it.
The beginning was fun. It was fun, and then
it became too political. The higher you go, and we're like,
so much HR, so much nonsense. It was just like, well, you guys know, a lot of people know. So,
but you were helping people get other jobs within the company.
That's right. Yeah.
He recognized you because of that.
Yeah.
Maybe you could stop clicking on this pen.
Yeah. Even I'm drinking iced tea. It's full of caffeine. Sorry, I'm getting jacked.
So are we. But yeah, a lot of Italians and Greeks can come up to us, and my accent comes back there. It's just crazy what happens. I don't know, I get a little bit more aggressive back home.
Yeah, where are you from in Montreal, by the way?
Well, where are you from?
I was from many places. I was from in Villeray, RDP, Vimont-Laval.
What is RDP? People don't know what that is. Rivière des Prairies.
Vimont, then back to RDP, then back to Vimont. Guys, it was a mess for me, but you were...
Montreal North, on the border of Saint Leonard, and then Saint Leonard right next to Montreal North. And it's funny, but my parents just sold their house in Saint Leonard yesterday.
Yeah.
Well, they moved yesterday.
Yeah, they moved
25 years later. Now they're moving somewhere else in Saint Leonard.
Not very far.
Not very far. But yeah, I'm an East End Italian kid.
So when people from the East End come up to us at the Montreal Blossom event,
they resonate right away.
Yeah, and then our accent comes out.
It comes out.
I miss that. Every time. Then we spent the last few days with family and friends, and that was fun.
One thing that freaked me out a lot obviously a million people were coming up to us saying, I watch you all the time, I'm a big fan, watch your videos, taking pictures, like obviously that's super nice and sweet. There's some that you just don't forget. Like to me, my favorite one, now I'm fiddling with the pen. The thing I like, the feedback I like the best is I retired this much earlier because of you and your videos.
Yeah.
Sometimes we hear 2 years, 5 years. I've heard 10 now, 8 years. And this is not just one couple or one person. It's more like we're talking the dozens now.
Yeah.
And some of them even came to visit us
In Panama,
us in Panama just to tell us that. And I think some of them are living in Coronado there.
Yeah.
They're staying there. There's a couple.
There is. Fritz, I saw him.
They're in Coronado now.
Yeah,
it's just crazy.
I went last week I spent a day there, and I saw him at the country club. But there was a couple that came up to us at the Blossom event.
Yeah.
He was a doctor, like a chiropractor.
Yeah.
And she
neurosurgeon.
Yeah. And,
my Italian's coming back. This guy, he wrote a book. He gave us the book.
He gave us a novel. Yeah.
He has his own channel.
He's writing novels, and he does it in French. So he's helping the French community invest. So. And this guy's a neurosurgeon, like he's intelligent.
He's
right?
certified. Okay?
Yeah.
He's certified in something.
So I love that. He gave me his book, which I have to read, by the way.
What's the book about? That's my favorite part. It's literally a dark.
It's like a female Dexter.
A female
serial killer.
Serial killer.
But she's a dominatrix.
She's a dominatrix or something. He's like, oh yeah, and my wife does marathons. Remember, she was like the most in shape 50-year-old that I've ever seen.
She was amazing. And I'm like, oh, can you sign it for me?
And he signed it. It's so funny. The second thing that I love hearing, or I'm shocked at hearing, I don't know if you've heard this many times. How did you hear about PII?
Yeah.
It's a friend. It's a coworker. It's word of mouth.
Yeah.
It's not like Google or searching. A friend told me about a friend, you should do this or think about this. Or my friend retired 5 years early and he just said, what are you talking about? I just doing like this. So we're getting so much more of that. It's just crazy. And that's what lights the fire.
I love it. I love that stuff.
So
we're talking about this income and how it helps people retire. Like it can actually fix a lot of real world problems. Like
of course,
with
because
AI,
once you're free, you could do a lot of good things for the world.
But in the work field right now, AI is disrupting.
Yeah.
People are going to lose a lot of jobs. Imagine, you could work for 10 years and build your portfolio and just basically live off it afterwards. You no longer have to work 30 plus
25, 30. That job that long with the pension and that's all going away, guys. So
the corporation is no longer needs to employ someone for 30 plus years. So that's good for the shareholder. It's good for the investor. So I think that, and I'm just talking, who knows if I'm just saying BS, but it could be disruptive in the sense where you can be self-reliant. People talk about UBI.
Yeah.
I mean, this is
making your own.
It's
Elon Musk talked about it recently with Rogan. It was funny. He predicts, and I think he's right. If your job is not moving atoms in the real world, like plumbing, it's most likely going to go away. Like if you're in front of it, including our jobs, and then we started thinking, how could incident problem manager be replaced by AI? And
very easily. Yeah, very easily.
So this should be, instead of being scary, embrace it, make the good decision, and start investing now as much as you can in these Mag 7 stocks, which are just gonna. They're literally bigger than most economies now. It's only going to accelerate.
Yeah.
You have to invest. You have to, and like you said, it's not going to take 20, 30 years.
I don't think so.
Do it for 10 years. Invest half of your paycheck, and you could do it. Focus. Make it a priority for 5, especially when you're in your 20s and 30s. Because when you hit the 40s and 50s, it's only going to get harder and more difficult to do the overtime. But that's what we did. We always took the pager. Overtime, remember the pager?
Yeah.
We actually held pagers.
Yeah, back in the
because
day.
It was an extra $200 a paycheck.
Yeah.
Screw it, we're gonna take it.
Yeah, we got taxed like crazy, but
you go with the RSPs and then you get a refund, and you have to do it. You have to do it.
For sure, it's irresponsible not to do it at this point. So.
Pretty good first.
I think that
an hour and 42 minutes. I think
that's long. Yeah.
So.
Yeah, I just want to say.
Hungry.
Yeah, I know we have to go eat. One last thing I want to talk about the website. Where actually finally guys, I made that website 5 years ago. It's a mess. I know. I'm sorry.
The contact form doesn't work. Password reset doesn't work.
The plugins, they update randomly and then they they conflict. So I'm like, I need help here. So I'm in Panama. I interviewed some firms in Panama, developers. I could have done it for half the price. I could have outsourced it for even less than that. But we decided.
Tell them who you hired.
To go with this company in Montreal is founded by two Italian guys from the East End, and they're on Bélanger and Papineau. They're right there. And I'm talking to them. They speak my language, and when I say that, I'm talking about
they speak your accent.
My accent
too. Yeah.
So finally, they're working on it. So we're gonna have a brand new website. You'll still be able to download the new version of the
package. Don't worry about that, guys. You'll always get your lifetime updates.
We're gonna be doing that. We're gonna be launching the update before the website is completely redone.
Couple of weeks max.
Yeah,
it's pretty much done. It's gonna be a nice package. I know there's a lot of new ETFs that came out in the last year. I spent meticulously time updating all that, revamping the portfolio, samples, examples. So. And it's going to be great.
Everyone who owns the package will get the update for free. The part where it's for beginners, the brokers list. I've actually added a link, an external link that actually shows you how to do your own login, how to buy your first stock. So it points to their YouTube channel or their website channel. So it shows you how to do it directly. So
brand new website, guys. Very excited.
Yeah, brand new website coming soon. There's a lot of cool things happening. We've decided to reinvest into PII, into the business of PII, because
you're much more active now, which is great.
We saw that people are the feedback. Because of the feedback, I want to hear from you guys more. I want to talk to you guys more. So we're going to be doing some things that we'll be announcing very soon, and
we're working on.
It's exciting.
Yeah, we're working on with our partners and friends. Yeah. The fund managers who are very
PII pioneers as well. There's a lot of things coming up, so I'm excited for that. Those guys are great. I mean, I love talking to them. They're so fun.
I know you guys love the PII Pioneers podcast. We got a lot of good. Our goal is to keep doing that at least once a month and invite a bunch of people, even from the US, to have those conversations. So
around Christmas time, we might do an AMA. So that's gonna happen. We'll spend some time together during the holidays.
Yeah. And I just want to say thanks for your support. We will always be with you. Don't worry, we're still going to keep going. And let us know your feedback on this particular episode.
Yeah, I know it was long, but
is it...
you don't have to watch in one sitting. You can watch in a few sittings.
But tell us what topics you want us to go through. More personal stuff, less personal stuff, a mix. Just go everywhere, talk about the latest content.
Well,
tell us what you want us to talk about.
We forgot to mention about the recent dips in the markets, and
we don't have time for that. But by next podcast, it'll be fully recovered, or maybe it'll be down 30%.
What should people do? Basically, nothing.
Buy more.
Buy more. Yeah.
Do not. You could. There's three things you could do. Shall I say it again?
Ahead,
there's three things you could do. There's only three things you could. Panic and be mad and sad and take pills and drink and whatever.
Okay.
And sell your stuff and do that. That's the wrong thing.
Yeah.
The decent, I would say good thing is do absolutely nothing. Shut off the computer, shut off everything. Go outside, watch the birds, live your life, walk your dog. And then the great thing, do that, but keep buying more, keep averaging down, keep consistently investing over time. Yeah. That's the great thing that you could do.
Or that's what we're gonna do. Of what you guys do during these little mini dips, and to see how you react.
We'll talk about that next time.
Sounds good.
See if the market's down. We'll
Thank you for watching.
Thank you guys.
Appreciate you guys. Take care.
See you next time.